Our market master of the day is with us. Gautam Trivedi is co-founder and managing partner at Nepean Capital. Gautam, great to have you back on the program. Thank you very much for your time. It's been a while, so would be good to hear your thoughts. And so much has happened, right, Gautam, in the world, and a little bit here as well, in India as well. We've had a rate hike from the Reserve Bank. There's perhaps one more to go, according to a poll that we conducted. So not that much tightening in terms of what the market is expecting. How are you looking at things, and more positive or a little cautious now? What's your sense?
No, I think we should remain cautious, and I don't think the Fed's rate hikes have obviously, I don't think they're going to go slow. The Fed's war on inflation, that's resulting in this interest rates going up globally and the strengthening of the dollar. Unfortunately, emerging markets like us, like India, are basically collateral damage. And that's causing imported inflation. And I kind of feel bad for the RBI because you're stuck between a rock and a hard place. If you raise rates too much, you end up hurting the domestic demand, which has actually revived significantly in the last 2 quarters. At the same time, if you don't, then you're in a situation where your rupee slides further, causing more imported inflation. So I think that is obviously one issue. Second issue that I see going into the fourth quarter of this calendar year is the fact that commodity inflation, I don't think, is going down anytime soon. It's going to remain elevated. And you've seen what's happened even with the case of oil, even though it's corrected 27% since its high of $128, at $94 a barrel, I'm referring to Brent, it's still very expensive for most emerging markets, including India. So, and again, OPEC's decision to cut oil production by 2 million barrels a day isn't going to help the situation. So I think given these factors, we still remain cautious. The good news is India's got a lot going for it, but will it decouple? We don't think so.
Okay, still remain cautious. Gautam, good morning. So what are your thoughts on whether there is more downside in this market left? And if yes, how does one approach it?
I think downside is certainly left in this market. I tell you where I'm coming from. Again, in spite of all the stuff that we've seen, and of course, you've seen some degree of FIs coming back into the market, which was a positive briefly. Again, last month, they sold almost $1 billion. So I think what we've seen in every major correction, and I'm looking at the number of corrections that have happened in Asia, and you've seen since 1990, the S&P 500 index has corrected 10% or more 26 times. And each time it's taken down global markets, including Asia and India, with it. So will India end up decoupling? I don't think so. What we see is the other concern, of course, is in terms of valuation. And again, I've said this before, India has, of course, always been one of the most expensive markets among the emerging markets, and always the most expensive Asian market. But now we're at 20.3 times calendar 23 PE, which is more than double that of China's. MSCI China is now at 9.3 times. MSCI emerging markets are even at 11.2 times. So given that, I think, given all of that, I think the market is essentially too highly priced, and a correction actually would be a great positive.
Hi, Gautam. If we are to see a correction, how deep do you think we could go from here? Do you think that June lows of around 15,200 odd, we could revisit that, maybe go below that?
We could certainly revisit that. I don't know about going below that, but certainly revisit that. And the reason I say that is because we've tested that once already. Now, let's keep a couple of other factors in mind. That, yes, the recession and the issues that are there in the West are not necessarily the same issues that we have back home in India. So let's get practical about that. Having said that, so for example, we don't have electricity issues like Europe has. We don't have labor shortage issues like the United States has. Of course, we have a lot of labor here. But having said that, I think it's going to be the correction in the markets, and to the level to which the Nifty drops is going to be a function of how much more money retail investors keep putting into the market. Now, don't forget, until maybe about even 6 months ago, the only real alternative in the equity markets was basically equities. Investment opportunities were equities. And now we've seen rates going up significantly. We've seen a revival in the real estate market, which is ironically funded out of gains made in the equity markets. So finally, investors in India have two more alternatives versus pure equities. So I think as rates continue to go up, and which I'm sure they will, I think some of the money that would have been destined for the equity markets will start finding other avenues of investments. So the ability to support this market when that fall does come, and I hope it doesn't come, but assuming it does come, will be, I think, driven by how much more attractive other alternative investments are.
Gautam, so you're basically saying that some of the resilience will break at some point, and people will throw in the towel here. Gautam, is that what you're saying? As the US stays focused on raising rates, markets continue to be under pressure there?
I think so to some extent, because the fact is that the US, what's happening in the US is impacting the whole world, and we're not immune to it. And this has nothing to do with the government's policies or any of that, right? This is what the United States is doing, and the US dollar remains the major currency for trade, major currency for conducting business globally. It may change, and as attempts are being made by other currencies to try and get a bite out of that market, but that's a prolonged process. The other thing which I think is going to continue to impact inflation, I think, which people are sort of undermining to some extent, is the fact that global corporations, I think it's dawned upon them that there is no quick fix to the supply chain bottlenecks. The China plus one strategy will take time. It's not going to be done in the next 12 to 18 months. It will take, I think at least 4 to 5 years for it to be implemented and mature. And as a result, in the medium term, inflation is here to stay. It's not going away.
Okay. Would you buy IT stocks now, Gautam, ahead of the earnings?
Actually, no. I think anybody who's in the export side of the business, and again, as we know, two of us, our biggest markets for exports for India, and not just for IT, but even merchandise exports, are the United States, i.e. North America and the European Union. So as a result, both of those which are currently undergoing economic challenges, I think I'd stay away from anybody who's in the export side.
Right, Gautam, the last time we chatted, I think a couple of months or so ago, you're fairly positive on telecom, and I think Bharti Airtel was a stock that you were fairly positive on, and that was an outperformer in an otherwise weak September. You continue to hold that positive stance, and would Bharti Airtel be the only way of playing it?
Well, unfortunately, yes. Bharti is the only real way of playing it. I wish Jio was listed, but that's not going to happen until the company takes a call when to do that. The other alternative is Vodafone, and that's obviously a very high beta bet if somebody does want to take it. And the last alternative, which is MTNL, unfortunately, even the government seems to have thrown in the towel for MTNL. So Bharti remains the only real way to play the telecom and mobile sector, and I would continue to advise investors to hold that.
Where else, single stocks, are you finding opportunities, Gautam, like Bharti? What else?
Well, I think, I think, I don't want to get into single stock specific recommendations, but what I would say is that what's good is very expensive, and what's not good is also expensive. So we're today in a situation where I'm just giving an example of a Pidilite, okay, market leader, 141,000 crores market cap, and a steady compounder. But the problem is the stock's now at 68 times FY24 earnings. Would you have the courage to buy the stock at this price and this valuation? Probably not. So I think there's from a longer term perspective, if a correction does come, would be a perfect time to buy.
Okay, well, it always works like that, right? You have to pay a price for premium products. Wanted to ask you a little bit about autos. There's a big breakaway over there coming out of a long bear market. And we were just narrating how even in markets like North America, truck orders are now at record highs. So a lot of companies benefiting from that. If you had to play this pocket now, where would your preferences lie?
I would still stick to the passenger car segment right now, because the fact is you're seeing a massive flurry of orders and demand coming in literally across the board. And I'm not referring only to Maruti, even the non-Maruti segment, which is the other 50% of India's demand. We're seeing a lot of interest coming in. So I think the passenger car segment clearly is doing fantastic. You've seen the numbers that came out of FADA, which are very positive, comparing them to September of 2019, where passenger car sales are up as much as 44%. And the segment that's not doing well and not done well, which is down 14%, are the two-wheelers. And I was kind of surprised yesterday when I was looking up some of these stocks and to find that the market cap of Hero is half of that of Bajaj Auto. I'm not necessarily saying Hero's it's time to buy the stock, but I didn't realize the stock had fallen as much as that. So I think there could be potential opportunities out there from a very longer term perspective. But until rural India doesn't pick up, I think a lot of these stocks.
Oops. Okay, I think, all right, Gautam, we will leave it at that. Thanks a lot for joining in and taking us through your views on the market. That's an optimistic Gautam Trivedi saying that, yes, things are going to, I mean, there could be some caution in the system for a while, but overall, there's some downside left in the market, but in the larger scheme of things, things will definitely improve.